संकट की घड़ी में भारत सरकार भारतवासियों के साथ भी खड़ी है और अपने नेपाल वासियों के साथ भी खड़ी है। यह मैं विश्वास और भरोसा दिलाना चाहता हूं।
Yesterday they were between 4 and 5 and now today they are between 3 and 4. The message is very clear that now there is a declining trend in the magnitude and intensity.
Well, Nepal is struggling to pick up the pieces after the devastating earthquake. The death toll is now near 4,000. The United Nations has said more than 1 million children have been affected by the quake. We will get you ground reports from Nepal in a little bit on the show. Horrifying images coming in there from Nepal.
Essentially, you know what's even worse? People have to spend the 4th day outdoors. Back home, the death toll has reached 72.
We'll get you more from Nepal in just a bit. Our prayers are there for everyone there. But let's go on to the other top stories that we're tracking for you this evening. It's the largest deal ever in the Indian IT sector. French giant Capgemini is all set to acquire IGate for $4 billion. To strengthen its footprint in the US, the combined entity will have 12.5 billion euros in revenue and nearly 2 lakh employees.
Maruti reports a solid set of fourth quarter numbers, beat street estimates on all parameters as margins hit a 5-year high. ICICI Bank meets expectations with profit and income, but bad loans spike and provisions jump by over 88% this fiscal.
The free fall continues on the Lal Street. The Nifty tanks nearly 100 points to break below its 200-day moving average. Mid-caps get battered as well.
Despite the tough talk, the government seems to be developing cold feet on the controversial land bill. Sources say the centre may not push for the bill for passage in the current session, as supporters like the BJD and the AIA-DMK are having second thoughts.
The Finance Ministry gives in to the Oil Ministry's demand, agrees to put the entire subsidy bill of 8,600 crore rupees for Q4 of the last fiscal to OMCs. That's a CNBC TV 18 exclusive.
The boardroom battle heats up at United Spirits. Vijay Mallya remains defiant after the board asked him to step down as non-executive chairman over what it calls as illegal loans to the UB Group companies. Diageo says it's contractually obliged to support Mallya as chairman.
But did SEBI inform you that an open offer would not be required?
Yes, they have written to us an official letter to us, to the ministry.
Market regulator SEBI took a call to waive the open offer when Ajay Singh took over SpiceJet, says the Minister of State for Civil Aviation. Mahesh Sharma also says that the IRA is capable of regulating airfares if the cabinet decides to put a regulatory mechanism in place.
The government hikes the FDI limit for the pension sector to 49%, in line with the insurance sector. 26% FDI can come through the automatic route. Anything above 26% will need FIPB approval. Defense deals in India and across the world corruption-free. A special report on the Transparency International's rankings coming up. The free fall continues on the Lal Street as the market saw some sharp cuts for the third straight session. The Nifty down close to 100 points in trade, breaking below 8,300 and barely managing to defend 8,200. The Sensex lost over 260 points as it nears the 27,000 mark. The cuts were even more brutal in the mid-cap space, with the mid-cap index losing about 2%. That was the story as far as our markets go. It didn't turn out well on Monday afternoon. Now, India's largest private sector bank, ICICI, reported a mixed set of fourth quarter earnings today. Profits and total income have seen healthy growth in line with street expectations, but provisions have jumped over 88% in the fourth quarter compared to last year. Bad loans have also seen a spike, with the total net non-performing assets surging by 31%. The stock coming under selling pressure in trade post those earnings. Ekta joins us now with ICICI Bank's numbers. Ekta, how big a concern is the rise in NPAs?
Well, overall, you'd have to say that ICICI Bank reported what was a mixed quarter this time, and you saw that in terms of the intraday recovery as well for the stock. Now, in terms of the key parameters, I'll start with the NII. It was slightly higher than estimates with a growth of 16.6% versus estimates of 13.7%. The profit too was in line with estimates, up around 10.18% versus an 11% estimated growth. Remember, it was supported by a higher other income, which was up 17.5%, which was fueled by treasury gains as well, and operating income, which was up around 22% for the quarter. So it negated the provisions, which in fact spiked up 88% to 1345 crores on a year-on-year basis. Now, the other parameters such as the net interest margins continue to improve, so that was a positive as well. In fact, the net interest margins were up 11 basis points sequentially to 3.57%, and remember that it had improved around 4 basis points in the previous quarter on a sequential basis as well. Why was it mixed? Because the asset quality worsened. So for example, the gross NPA was up close to around 15.5%. The net NPA was up around 31% on an absolute basis, and the gross NPA on a ratio basis worsened 38 basis points, with the net NPA worsening around 24 basis points. If you look into the internals, in fact, it was mixed in terms of asset quality. So the fresh restructuring was at 1247 crores versus 1700 crores odd in the previous quarter, and versus an estimated pipeline of around 2300 crores. So that was a positive, that it was lower. They added gross NPAs of 3260 crores in Q4 itself. Out of this, the bulk was from slippages from the restructured book. So that comprised of 2246 crores, which compares to around 770 crores in the previous quarter. So that was a negative, but the addition to the fresh NPAs then came in at 1000 crores if you do the math, which would then be a positive because it compares to around 1500 crores in the previous quarter. So overall, it was pretty much a mixed performance from ICICI Bank this time.
Given the challenging operating environment, the banking sector has continued to see additions to NPAs, and also the slippages from restructured portfolio to NPAs. Given this background, the bank's net NPA ratio was 1.4% on 31st March 2015 compared to 1.12% on December 2014. The outstanding net restructured portfolio actually reduced from 11,017 crores at March 2015 compared to 12,052 crores on December 2014.
That's Chanda Kochhar on the quarter that's gone by. Now, while ICICI Bank may have disappointed the street, Maruti has delivered a solid performance in the fourth quarter, beating estimates on all parameters. That stock up by 3% on rate the markets had crashed. Profits rose by a mammoth 60% thanks to a 72% surge in EBITDA. The yen depreciation and the lower raw material costs have lifted the company's margins to nearly 16%. That's the highest in the last 5 years. What's even more impressive is the company's volume growth. For FY15, Maruti had set itself a target of 10% growth, and it's beaten its own forecast with volumes coming in at nearly 12%. So high volumes, lower ad spends, favorable forex rates and lower input costs have all worked favorably for the company. This has raised hopes that India's largest car maker is on the road to recovery. But the company is still wary thanks to unseasonal rains and a weak monsoon forecast that may hamper rural demand in the coming days.
I don't think FY16 diesel sales will increase for the industry at all. I think there will be a further erosion in the share of diesel in total sales. And I think Maruti will also find it hard to increase its share of diesel. So at best, I think the diesel status quo could be maintained by Maruti. And as industry as a whole, I'd probably see a further fall in the share of diesel.
You have said that your long-term strategy in the rural segment is that you will be putting up your sales and service centers, but due to unseasonal rain and deficient monsoon which has been predicted so far, how do you see it coming for the auto sector?
The last year also was not a very good monsoon, and we don't know whether this year's monsoon will be very different from last year's, in which way it may be different. The unseasonal rains, of course, have played a bad role in terms of the farmers' economy. But our plans of going ahead with pushing rural sales, opening more outlets, opening more showrooms and workshops will continue.
Well, that's the chairman of Maruti talking about some of the challenges the company may encounter if the monsoon is subpar. But for Q4, it's been an outstanding performance by India's largest car maker. Now, it's the largest deal the Indian IT sector has seen. French IT services giant is all set to acquire US-listed IGate for a little over $4 billion in a bid to strengthen its presence in North America. In an all-cash deal, Capgemini will pay $48 for every IGate share. That's a 5% premium to Friday's closing price. Purima tells you why Capgemini wants IGate.
At $48 per share, Capgemini has bought IGate at 20 times the one-year forward earnings per share. Analysts say the French IT giant clearly made an offer IGate couldn't refuse. The combined entity will have revenues of 12.5 billion euros and nearly 2 lakh employees.
When we met with them and they met with us, the chemistry was instantaneous, in terms of shared value systems, in terms of shared vision, the kind of IT services new model that we want to create. So it was, smooth and fairly one-on-one.
Brokerage firms also say that Capgemini's long-term position has improved, but there are concerns on the French IT major's weaker offshore presence when compared to Indian IT peers. This merger will help Capgemini, a largely Eurocentric company, gain a foothold in North America, the largest and most vibrant IT services market in the world. North America contributed 79% to IGate's total revenues in 2014.
I has performed more than 40 acquisitions, and some of them went smoothly, some of them went a little tougher. So I'm experienced in meeting management teams and compare, and in the last 18 months I've met with several companies. In this case, I've met with more than 20 IGate executives beyond Ashok, and the chemistry could be seen in the room. So I just think there is not only a fit, there is adequation, there is alignment of client centricity, people respect, going for added value, creating innovation, and I think personally we had a very smooth and successful integration with Canbay. I'm pretty sure IGate will provide the same benefit for our clients, for our people, and for our shareholders.
Capgemini says the combined entity will provide cross-selling revenue synergies of $100 to $150 million and annual efficiency gains estimated at $75 to $105 million to be achieved within 3 years. But analysts say the biggest challenge for the two companies will be cultural integration, which is expected to be complete over the next 9 months.
We will continue to exist as independent businesses and till closing, and there's a lot of regulatory things that have to be completed. That there are significant complementarities. We have the opportunity to really beef up our financial services capabilities as well as North American business, which is about 79% of IGate revenue.
IGate also hopes to benefit from Capgemini's expertise in the digital and financial services space. While the combined entity may not threaten the Indian IT biggies, it could signal further consolidation in the sector. With Purnima Murli in Bangalore, in Mumbai, Arvind Sukumar.
That $4 billion deal is the biggest one ever to involve Indian IT industry. And there's a big policy story of the day. The new land acquisition bill may not be ratified by Parliament in this session. Despite the tough talk, sources indicate the government may have developed cold feet as the agri-crisis is worsening across many states. Ritu Parnabhiyan has been tracking these developments closely and now joins us. Ritu, we have said the government first wanted to wait for the finance bill, the constitutional amendment bill to the GST, as well as the black money bill, all of them to be passed. But maybe it's going to miss its date with this session of Parliament.
There are just 6 working days as far as the Lok Sabha is concerned, and out of that 2.5 to 3 days that will be required for the financial bill and discussion as well as passage of this crucial budget related measure. After that, in the next remaining about 3 days, the government wants to discuss and pass the GST as well as the black money related legislations, because they have prioritized these 2 key legislations. And hence, there is very little time left as far as the Land Act amendments are concerned. Now remember that the land ordinance was re-promulgated, and hence it has to come to Lok Sabha again and has to be discussed and passed again by the Lok Sabha. After that, it will be sent to the Rajya Sabha. Of course, in Lok Sabha, the government has the numbers. In Rajya Sabha, it's a big question mark. It cannot pass the bill without the numbers in Rajya Sabha. And from sources, we gather that the government is in a big dilemma if to go ahead with the Land Act amendments, and most likely the government may not go through in this session itself as far as the Land Act amendments are concerned, because A, there is hardly any time, B, the political mood within the country, especially after the unseasonal rains and farm distress, the perception game, the government does not want to take any risk, and hence the government is unlikely to take forward the Land Act related amendments. Last but not the least, we also gather that Biju Janata Dal, which so far has been supportive of Land Act amendments, they are also gathering tomorrow in Parliament to discuss the future strategy regarding the Land Act amendments, because several MPs have expressed reservation, and hence BJP will take a final call on if to support or if to oppose the Land Act amendments. Of course, we'll get to know about it only tomorrow. With that,
all right, Ritu, appreciate you joining us with those details. Going slow there as far as the land bill is concerned. Not enough time and too much opposition. There is now room for foreign direct investment in the pension sector. The Department of Industrial Policy and Promotion has notified that the FDI limit for the sector has been hiked to 49%. That's in line with the limit in the insurance sector. Remember, both those bills are aligned. Foreign investors can pick up a 26% stake through the automatic route. Anything beyond that will need to be ratified by the Foreign Investment Promotion Board, or the FIPB. The FDI hike will be effective immediately. All investments will have to abide by the PFRDA's norms. The government has managed to pass the insurance bill in the first leg of the budget session of Parliament with almost bipartisan support, and that paved the way for the pension bill as well. But now the left parties are up in arms over the pension FDI hike. D. Raja of the CPI told CNBC TV 18 that the party will fight the hike using all parliamentary procedures.
We will examine this, and we have been opposing the putting pension funds in stock market or speculative market, and allowing FDI in pension schemes. I don't think it is a wise move, and it is a correct move which can protect the interests of the retirees or employees. So in such a situation, definitely we will explore all the parliamentary possibilities, procedures to oppose this kind of move.
Well, the bill is through Parliament. I don't really know what the left parties are going to be able to do now as far as the DIPP and the notification for FDI is concerned. In a major boost for oil marketing companies like IOC, HPCL and BPCL, the Finance Ministry has agreed to fully compensate the 8,600 crore rupees of under-recoveries incurred in the fourth quarter of FY15. And you've been tracking this story, so the Finance Ministry not wanting to play villain, good news for OMCs. And finally, we may not need that new subsidy sharing mechanism.
It certainly seems like that. So we knew all this time that the upstream companies were going to be exempt from the subsidy payment. But now good news coming in for oil marketing companies. There was a fear that perhaps they would have to absorb some of this in the fourth quarter of this fiscal. But I understand from my sources that the Finance Ministry has agreed to first up pay the entire 8,600 crore rupees. Here's the breakup. 5,300 crore rupees is what the exchequer is going to pay for the subsidized kerosene, as well as the LPG cylinders that has been sold as part of the direct benefit transfer scheme. There's another 3,300 crore rupees of under-recoveries that's been incurred by the OMCs for selling LPG cylinders outside of the DBT scheme. I understand there is going to be an audit, and post that is when we're going to see the exchequer pay that amount. In fact, this is going to become a quarterly exercise where the Department of Expenditure is going to be doing an audit. And here's why. The government has decided that the LPG subsidy should be fixed at 18 rupees a kilogram, which works out to be about 255 rupees and 60 paise for a 14.2 kilogram cylinder. That is the most common size cylinder that is sold in the country. Right now, you have an under-recovery of almost 200 bucks on that LPG cylinder. So what happens to the rest? That is going to be kept by the oil marketing companies in a buffer account. In case prices go up, the oil marketing companies will tap into that account to make up for the under-recoveries. If the situation goes out of hand, that's when we perhaps once again going to see the upstream companies once again chipping in. So that is a new mechanism that seems to be in place as far as the oil under-recoveries go.
All right, Nentara. Well, that much-awaited subsidy mechanism may not be needed after all. Now, there's one more sticky boardroom standoff taking place in corporate India, and Vijay Mallya is in the thick of it all. The drama heightened over the weekend, with Mallya rejecting demands from the USL board, asking him to step down as the non-executive chairman and director. Sonia Shenoy and Surbhi Upadhyay get you the twists and turns.
The king of good times is finding the going tougher every day. The hammer fell over the weekend when the board of United Spirits called for Mallya to step down from the post of non-executive chairman and director. This demand came on the back of allegations that a forensic audit conducted by PwC has revealed that 1,337 crore rupees were diverted from USL's coffers to Kingfisher Airlines and other group entities between 2010 and 2013. Mallya, however, has refused to buckle and is busy putting together a legal team to spearhead his legal defense against these allegations.
The removal of director can only happen at the shareholder level. The process for removal is provided under the Companies Act is very detailed. And, there is a strict procedure to be followed. It's taken very seriously, especially in India, for removal of directors. So it's about a 45-day process where you have to give notice to the director.
Other experts say there's a dichotomy between law and practice.
The practice in India is that the people appoint shareholder chairman also in the board. But company law states that the board elects its own chairman. So the board has very much right to say that, okay, now XYZ will be the chairman, Mr. Mallya will not be the chairman. But here the problem would be because election of Mr. Mallya as a chairman has happened through the shareholder meeting.
But Mallya may have an ace up his sleeve. He personally holds a 0.01% stake in United Spirits. His UB Holdings holds 2.9% and other investment companies controlled by Mallya own around 1.18%. This puts Mallya's holding in USL at a little over 4%. So while Diageo may hold 54.78% stake in USL, the shareholding agreement it has with Mallya says that Diageo has to endorse Mallya as the chairman of USL as long as he has a stake in the company.
There is an agreement in place between Diageo and Vijay Mallya where Vijay Mallya has been given a vote-along right by Diageo to keep Mallya as chairman of the company. To the extent that there is any discrepancy between the shareholders' agreement and what the shareholders want to do and the company wants to do in a meeting, if there is a diversion, it is what happens as per the articles that rules.
Interestingly, Diageo has decided to stay neutral for now. Following an emergency meeting held over the weekend, it said it, and I quote, has certain contractual obligations to support Dr. Mallya continuing as non-executive director and chairman of USL subject to certain conditions and in the absence of certain defaults, end of quote. But in the meanwhile, shareholders in USL are in for some trying times with both the USL and the United Breweries holding stocks falling nearly 4% each on the first day of trading after the battle erupted. In Mumbai with Sonia Shenoy, Surabhi Upadhyay.
So that's the latest as far as that boardroom battle goes. And earlier this year, CNBC TV18 had raised this USL matter with SEBI because in 2012, SEBI set up an institutional mechanism, the Qualified Audit Report Review Committee, to examine serious qualifications to accounts. So Menika Doshi asked SEBI Chairman UK Sinha about the qualifications to USL's accounts. Listen in.
There has been this most egregious circumstance of United Spirits, where a large number of instances or issues have come to light in the last 6 months as the company changed ownership. And the new owners have discovered all kinds of things. For instance, money lent to group companies, money lent to people, and then those people are refusing to return it because they say that promoter entities have taken the money from them already. All of this has led to large-scale qualifications on the USL balance sheet. And I want to know whether Clark will be looking at instances of this nature.
I will not answer a question about one particular company that you are referring. But you have rightly asked the question about qualified audit reports.
Yes.
So any company that you have in mind, please go back and look at whether those audit reports were qualified or not.
Qualified, this one is.
If they are not qualified, they won't come under SEBI circular.
I get that, sir.
So if they are qualified, our system is very clear. We get the reports from the stock exchanges, and I don't have the data at this moment, but there has been a lot of progress about the qualified audit reports. And we refer it to the body within ICAI, and there have been a number of cases where even restatement of accounts has been ordered. only change which I have made from the original circular is that at the time of ordering a restatement of account, one opportunity should be given to the company to present its case. That's the only change I have made.
Well, that's the market regulator speaking to us on the issue of qualified accounts when we raised the issue in January. But of course, this is going to be a battle that is going to brew on for a while now. From all of us here on CNBC TV 18, thanks very much for watching.